What's up, everybody? Afternoon session starting. Welcome, welcome. Back. Thank you all for tuning in. Welcome, welcome. Rate hike. Oh, oops. I meant to do rate cut. Good call, good call. Oops. Oh, oops. Yeah, let me edit that. Why I say rate hike? Oy. Just my life here. Can't edit that on stock twits. Oof. Rate cut. We shall discuss a rate cut. Good call, good call. Delete, delete, delete. No rate hike there. All right, trade this morning I took. See on the screen at the bottom. Took the long. To there. Closed out. Typically don't do much trading at this part of the day unless there's an opportunity that shows up. This is, yeah, YouTube's always recorded, so it should be here. Open in bear zone, typically close in bear zone. That's what we usually expect. Most days we talk about this a lot. The probability that this closes higher and rallies from here be interesting to see. Some pre-FOMC movement. Liquidity pockets are particularly random. What a lot of people normally will do here in this group is from here, we'll short scalp it back to there. Close it out. That's a normal trade a lot of people here make because they know that you start here, you're likely to end here, more probable, or test out. So even if it branches from there one way or the other, the trade from here to here is sometimes a solid one. You also have this yellow resistance here. This kind of let's say that's wrong. Rate NVIDIA. How did I get there? Here it is. I was like, that's the wrong yellow because they're supporting it. This is the big pivot today in futures itself. So underneath here, I think we do support this. We're doing something like that today. That's kind of what I'm drawing here. VIX is in decay. The upside will likely be limited by right here. Resilience number is very negative right now on the S&P. Just indicate likely gap fill after the pop. I wonder if I should make an attempt to scalp from here to here just to put something up. What do you guys think? Today's trade was a good... Don't scare you like that. Hopefully no rate hike for a long time. My bad. Oh, my brain is today. So this is new for us, this afternoon session, brand new. We don't have a time slot here, so I don't even know if there's an audience. We're going to test it out to see if anybody shows up. Our big time slot's at 9:30 in the morning. Feel free to follow and subscribe to the stream. Get the notifications here every day. At least this time slot too, we'll do a little educational session for like half an hour to an hour. If you guys make it grow, then I'll stick around. I'll keep doing this. See what the NASDAQ limits are. Okay. $19,229 is NASDAQ PD band. A little pre-positioning for Fed. Question is bull zone tap, do I fade it back to the redistribution zone? The 10-point scalp. Yeah, no point in gambling. The idea is that it's not going to rally. That's my bet. You work during the open, so all I do is trade afternoons. Be nice to someone to follow and keep coming at that time. Hey, so here, man. Feel free to sub to the stream. Love to have you. Serious mode. Put my glasses on here. Don't forget to check out the Rocket Scooter extended trial for the trading platform with all the tools built into it. Go to the link below to the description. Check it out. We're doing really awesome. $35 to check it out for a month just for the platform and the tools. And use all kind of like training videos and things for that if you guys want to learn that in your own time. It's very rare to hit bull zone and keep going. Yesterday, we did yesterday, I think. So the rare, but we did test the same trade from yesterday to test back down in the middle. Here it is. Let's play it. Why not? Oh, I got it a little early. Yeah, so we usually have like a no trading after 2 p.m. rule. Market typically can be a little chaotic at that point. So, but in the live session, I'm gonna try to do a couple of technical scalps just to show off more for this session for folks that can't make it in the morning. So normally in my normal trading diet, I don't trade in the afternoons. It's not something I normally do. But if a scalp setup creates itself, I'll take it. Like John said, deltas are balancing in the day. There's really no reason for markets to move. It's pretty random. So to take a bet from here is always like a random shot. Okay, the S&P resilience number finally just popped positive. Some stocks are trying to make a move. Man, interesting. Irrational days, resilience tends to not necessarily be the leading indicator we want it to be. So when these lights are yellow and red, we don't utilize the resilience, the white number, as much anymore. You gotta take it with a grain of salt. So one of the rules that we have is that if the markets, feel free to do me a favor, help the algo out. Click that like button below the stream if you want. If you're your first time here, kind of help. Let's build a viewer base here. Let's get this to a couple hundred people, like the morning show. We'd love to build out this time slot here. Okay, so one of the rules is if you open in bear zone, which we open way down in here, then 75% of the time you return to it. So at minimum, even if it doesn't return, even of the 25% that doesn't, it still tests. So trading back towards it is often a really good scalp to take. So not a terrible idea for me to take a trade there. Is it possible for you to see previous Roxier days? We don't have historic data shown on the chart yet, but Humble Trader, one of our members in chat, has been compiling the back test, all the data. He has all the data. These numbers actually come from him. He's just a member. He doesn't work for the company, independent. And he started doing a back test just to call BS, just like you do on anything. It's like, I'm gonna see if this is really real. You know, Matt says there's an edge here. Stats, let's see what it is. And he's been doing the data for like maybe 8 or 9 months now. And those are the stats. So one of the new modules we'll be building is a backtest module. It's like coming in the future, killing my goals for later this year is for backtesting the platform so that you can actually have the ability to do that. Yeah. Like that rationale. Yeah. He's like, I'm going to backtest the numbers, just FYI. Just I want to see what it's like. So no offense, you know, I'm going to report honestly what it is. I'm like, I want to see what they are, to be honest. I did my back test and they were smaller windows of time. My back test, the zone rule in a bull market, in a rational bull market, was 96% chance in a two-month back test that I did. So 2 months spot test and then 2 month spot test. It was like 96. It was like almost every time. Now there weren't a lot of events and catalysts over a longer time frame, especially in a bear market, especially with volatility incorporated. The overall effect, market-wide, bull market, bear market, flat market, irrational market, either all of the cases, it went from like high 90s to like 75 under all conditions. So when markets are rational, like all these lights are yellow and green, that probability goes up even higher than 75. So we probably assume like the 80s to 90s, somewhere in there. For market replay, yeah, it'd be kind of nice to have market replay. One of these days, we'll build it out one of these days. Yeah, all the calcs are done server side. I have to have a module for you guys to be able to pull historic data. It's on our wish list of things to do. We just don't have an active project for it right now. No. Humble Trader has them, so you can ask him. Humble, Humble, or Garrett Otto if you see him in the chat. He's the one so like members here stepped up and they're like compiling data and keeping records and stuff just to assist until we build out all the features. So I'd ask him. Yeah. There's a little spy print right there, a little late report. That's a neat little candle. Time in sales, it was huge. 152,908 shares. 535.82. 535.81. That was like a late report, a couple minutes late from this actual moment in time. I reported late right here. Ooh, this is a pretty nasty print there. That test you'd want to see. It's kind of knocked out. Yeah, I'm not like shorting for a big reversal. I'm just playing a technical play on this one. And normally I don't trade at this time because the probabilities are a lot harder to determine. After 2 o'clock, our usual rules are like stay out. But the stream wouldn't grow if people aren't watching, so I might as well do something. Oh, actually, if people aren't watching, if I was actually trading. So as I've learned, people want to see trades. So let's keep it exciting. Might as well. Saw a Discord message. What's up? What's up? Welcome, Mike. I know it is pretty scary. I don't know if I want to. Oh. In a normal life, it's not something I do. But the market's extremely bullish right now, for sure. So let me have to kind of clear this out. Oh, love it so far. Awesome, man. Awesome. Bring it with your playbook trades. It's good to see. Have you watched all the videos yet? Let's learn. Yeah, we put a lot in there. This afternoon slot, it's growing pretty quick. We don't normally stream here, so it must be the new kids on the time slot. So we'll see. Let's get this to 200 viewers in a month. 200 actives. That'd be good. So I'm the CEO of the Rock Scooter company, by the way. I created this trading platform and the marketplace that goes with it. We're glad you guys decided to join us on our stream. I'm also a trader, so built by traders for traders. We built these tools. I'm a live streaming trader as well. My belief is that we're pre-pricing in bullish news for tomorrow. And the market's spanning the range today. Spanning the upside, spanning the bottom side. We break out and we long, the market moves higher over the next couple of days. I believe so, yeah. It's like all your rational signs, like rational day, is just more of like a confluence metric, right? When all the signs are rational, your odds are the highest. So the last time we had like a day where it was all rational, I don't remember, probably a couple times a month for sure in this environment. Low volatility environments are trading below triple B, also more times a month. Multiple times a month in that environment. I mainly trade the S&P futures, ES, and Nasdaq futures. Yeah, both of them. Yeah, when everything's rational is when I hit my bigger positions, my bigger stride. Normally in like environments where there's like a couple of red lights, I trade like a lower size. Yellow lights kind of trade medium size. So when it's all green or all green and yellow, that's usually when I hit my biggest positions. My confidence is the highest there. Those are like the gimme days. If you wait and all the lights are yellow and green and there's like no event, like no news event, no anything that day, those trades are so easy because the market just has no reason to move on its own without an event, and just drifts along in a direction that's pretty easy to kind of find relative to most days. When I say easy, like trading of course is hard as all out, but easier relatively to most days. We'll be the first stream to tell you trading isn't easy. Most people try to tell you it's easy or that it's easy money, blah blah blah. It's easy for a lot of people to say that while paper trading, for sure. Or pretending to trade. But real traders will tell you it's not an easy game. But the idea for Rocket Scooter, the name, the technology, the platform, which question? Which one? Pretty sad when you come with the name. Pretty genius. Well, thank you. Very sweet of you. A technique that exploited the calculation that the CME group made to calculate margin requirements for futures contracts. We found out that what I reverse engineered from that thing of theirs created actionable pivots. And we started like a little kind of trading geek club, a Slack room many years ago, 2015, with a bunch of people that were just interested in like creating next level stuff that wasn't just like technical indicators, right? Like actually looking at data that was available and trying to exploit available data and methods that were different. And then as the years went by, it evolved into an indicator series. I used to stream a spreadsheet that just showed them. And before I had a platform, I would just have a spreadsheet on my screen. Then I built an app because people were like, "Can I get this information for myself?" I'm like, "Sure, let me build you an app." And I built an app for everybody. Got some professional data feeds to feed into it, some options data feeds. As the years went by, we created these liquidity map tools, which are looking at options, just some more ideas that I had to try to pinpoint positional risk in the market by isolating market maker options, figuring out like you could paint a picture of the landscape of where options were distributed, that you can create actionability in that in the market. And found out you could, like the liquidity maps are very strong, directional bias indicators. So and pivoting tools. So from that, we made the platform to get the information to people on a chart. And then from there, we just evolved into the marketplace now. It's kind of this whole big evolution here. Rocket Scooter name has a long history behind the name. But the short version of the story is like I bought a cheaper API package from a data provider because it met the specs of what we needed. Like we need a snapshot of the entire, landscape, and they had different packages of the ways they can get it to you. And I bought the cheaper one from them because it met our requirements. Right? We didn't need the higher end packages, and so when we bought it, it actually didn't work as well as they said it would for what we needed. And so in the discussion I had with the board was like, why didn't you pick a different package, or why did we go with that, you know? And I was like, well, you know, I could go buy a spaceship, or I can buy a scooter and put a rocket engine on it. Much cheaper. Gets the job done, and you know, it's supposed to work. I'm an engineer. You give me specs. I design into the specs. I can tell you they're going to work. If they don't work, it's your fault, not mine. And then the name Rocket Scooter, when we were trying to name the platform, kind of came out of that. It was like a nod to my engineering background. Now he's like tinker and build things in my garage and make things from scratch. And why would I go build something when I can make it myself? Or buy something when I can make it myself? So the logo is like a scooter with a rocket engine like strapped to it. It's not even like it's like not even part of the chassis. It's actually like roped on and tied off, just to kind of like imply that, you know, we whipped it up in our garage. Like it's in the works. It's a prototype. It's something we built. And so it's like to take pride in like your own ownership of building something that you've made, you know. That's where it came from. Hard indeed on your second year of trading, little on and off with lots of ups and downs. Really want to try to give it a real go. So risk management's the way to go. Like this is the one thing that we teach, and I think we excel at teaching on top of everything else we teach, is risk management, like how to avoid the market. Rule number one is don't trade after 2 p.m., which I'm actually doing right now. But I'm trading so you guys can see some actionability on the chart. So I shouldn't be honest, shouldn't be trading at this time. But as John had said, deltas are balanced. There's really no reason for markets to be moving from here. It's a little random. Even though it's a somewhat high probability setup, I'm taking it. Learning when not to trade is very important, and we're really good at teaching that. So if you check out the program, you'll see there's a lot of videos on risk management. All these lights onto the side, when they're just a rule of thumb, you see these red lights over here. Wait, hold on. Let me close this down. You see these red lights over here? Red light means don't trade, or trade very small if you do. So once these red lights activate, it's just more like have a standoffish approach to the market. Yeah. Fun to play the huge probability trade, no doubt. Yeah. So like this is a higher probability setup. It's kind of worth taking. It's not betting the market reverses. It's pre-FOMC, pre-CPI. We're pretty likely to have no activity to possible rate cut if the Fed's going to follow the actions of, you know, some others around the globe. That's being humble, Mike. I'm being humble. I tend to be pretty humble. But the videos you can see if you sign up to this extended trial, go to the description down below. The platform, all the tools. We have delayed data. You can buy optional real-time data if you want. And get it all. It's like $35 a month. It's not bad. Normally, the platform plus the tools is like $200 a month. So you can check it out just for a month, just to get yourself some risk management knowledge and check it out. What I don't want to see is this bull zone support right here. I don't know if it's the heat or what, but we have like a freaking fly infestation, I swear, in Texas. I left for like 4 days, and I don't know if like my front door doesn't seal all the way. It's got maybe like a 1/4 inch gap at the bottom. Just had to do with, I guess, the construction. So I need to get it fixed, but like essentially spiders, flies, bugs can just easily get in there. I think they're trying to get in to escape the heat or something. I don't know. I keep on like, there's one that caught in my house today, and I've been swatting at it left and right. I feel like, you know, I love nature and animals, and I'm like, bro, you can stay. Go drink. There's water in the toilet, but like, stop flying around my face. Oh, I got a swat at you. You know what I mean? Like, come, but stay to your side of it. Don't buzz in my mouth when I'm trying to talk. Okay, so supporting here and finding higher highs is my out point on this trade. If it does that, I don't like it. I want to see this make its way back to here. Supporting here is not good for that particular trade. Supporting here and finding higher highs is actually bad. When you move to bull zone from bear zone and it takes off, it can take off really rapidly, keep going, which is why my finger is literally on the button ready to get out of here. I know if it's hot where you guys are, but down in Texas, it's like hot. Like it's crazy hot. Hey, we broke the 40 mark. Awesome. So we started doing this time slot like last week. Somebody told me that I should start streaming at 1 o'clock every day. They said nobody's on YouTube at that time. And nobody good on YouTube. And then like, you know, why don't you stream in the afternoons? They're like, I only trade in the afternoons. The stuff I try to watch, there's really nothing there. Like nobody's like really live trading. And you should stream. And I was like, oh, okay, let me give it a shot. And I said, if people show up, I'll start doing afternoon streams. I do morning streams, 9:30 until usually 11. Rocket Scooter's about to open up a big all-day show at some point, which this will evolve into that. But we're trying to like build the time slot. So move to Norway. It's freaking cold here, dude. I'm telling you, some days I wish I lived where it was cold. I would live in a freaking tundra, cold. I would love it. I don't care. Mountains, name it. I love the heat. I love the Houston. Love my city. Love the beach. But sometimes, like, whenever I go places that's cold, like Colorado, I'm in the mountains chilling. I never am in a bad mood. I always feel, I'm like, nature just feels so much better when it's crisp and cool out. I don't know. An all-day show be legit. So not like an all-day stream, but like an all-day, an actual like show, kind of like what Tasty Trade does with different speakers, different panelists. We're kind of planning all that with the marketplace to come out. We're going to have different people speaking different days, hire some people, things like that. So the way I'm sitting right now, I don't like that my trade is trying to support a bull zone. Really every inch of this is telling me I probably should close out, minimize the loss. I'm going to give it a little bit and then close it out. I don't want it to support right here. That's bad. I want it to try to break through and then fail and reject right here. So, oh yeah, you love the weather. As I said, if I get this stream to like maybe 200 people by the end of the month, that'd be kind of cool. So let everybody know, or come every day. We'd love to have you. Ask me questions. Ask questions about the tools. Ask questions about what it is we teach. I'll give you as a quickie rundown of what liquidity maps and all this stuff does. It's pretty fun to learn. Honestly, it's a whole different layer to the market that you didn't think existed. We have a massive Discord. There's 5,500 people in it. Or 56. Let's remember how many there are. 5510. It's a pretty big Discord. One of the bigger ones out there for futures. Lots of stuff, educational tools. Yeah, check out the extended trial. You guys can, I mean, for you know the teeny little price that it is, supports the development of the platform, and you can quit after a month, like no obligation. So, want to learn all the stuff we teach? It's all in here. There's little cheat sheets we give you that help you understand the different tools. What we try to look for as an engineer, this is kind of like a brief summary of what I do, right? You guys remember in physics in school, there's always that you always had that problem. It was like this, right? It's like Timmy standing on the ground with the water hose, shooting at Tommy, who's sitting in a wagon with a bowl at an angle of like, 30 degrees. And the wagon's on a slope, and there's wind blowing this way, and there's gravity pulling this way. How far up does the wagon go until it stops moving? You remember those questions? Right? Engineers will remember those questions. You had your momentum transport class. Ugh, bleh. Right? So there's like a force balance. You took an object. If something's pushing it this way and something's pushing it this way, well, it's going to go that way, right? You just sum the vectors, right? You remember physics? So in trading, minus like humans doing human stuff, randomly buying and selling, the market has a natural wind on it from multiple directions. And we're kind of doing the same thing here, right? Different things create different effects. An example is options. And options is like the biggest one. And what we do is you try to find something that has a constant effect on the market. Despite humans playing it or not playing it, humans are going to do random things based on their desires to gamble or to take risk on off the table. But when humans step away, the algorithms are doing something that's very consistent. Example is if there are 1,000 calls at, I'm going to pick a number, at 400 SPY, okay? And SPY trades exactly to 400, then those 400 calls have a delta of 50, 0.5. If all of those sellers of those calls were delta hedging, which you assume that the majority of option sellers will be delta hedging, it's a constant thing everyone does, then they would be owning 50 shares for every contract, or 50,000 shares long. And if the price moved this distance to where delta was 0.6, every 10 delta or 0.1 delta is 10 shares. So if the price just moved from here based on a random person trading, like SPY went a couple, a little bit over, and the delta moved from 0.5 to 6, then the net position would be 10,000 more, equal to 60,000 total. Remember, delta, the easiest form of delta is for every 0.1 delta is 10 shares. So from 0.5 to 0.6 is 10 shares per contract. So I'm multiplying it by the 1,000 in the example. So if price moved to there, the sellers will actually have to buy 10,000 more, which pushes up even higher. So a movement in price creates a secondary movement in price, which causes delta to go up even higher, which causes more buying on that 2,000. I'm just making up numbers. Then a little bit more buying, a little bit more buying, a little bit more buying. And then it's like a fractal. It gets smaller and smaller and smaller. So like if one person buys, it forces other people to buy, which moves price up, which forces a few more people to buy, which moves price up a teeny bit, which forces a few more people to kind of buy. And then it just kind of fractals up. Does this make sense? You Greek sellers out there, John probably gets this. So just one large purchase right here can create multiple waves of subsequent orders. Let's all back to zone. Let's get it. So what's neat to know is that just if one person buys that pushes the market here, then it causes a second wave of buying. It pushes the market to there, which causes a third wave of buying, which market here. Just this one buy triggers a domino effect. And then ultimately, it stabilizes. Delta begets delta, but it gets smaller every time, as the moves have less and less impact on the market. So what we decided was that every time someone buys, there's a consistent move on the market. We're going to exploit it. And so that idea is that when the market moves, you can calculate how much more it needs to move to rebalance everything. And so that birthed the idea of let's use options to paint a picture of like that pressure that's there. And the whole Timmy, Tommy, wagon, water hose problem, it's one of the forces being applied to the market. There's a general long pressure in that event. That particular event I described There's just a wind of pressure. Despite people selling or buying, that pressure is going to happen no matter what. So the idea was, let's create indicators like that. Not just let's look at the price and let's create shapes and colors of the price. Let's go ahead and put on some random triangles here and some colors. And let's put some green and yellow smiley faces. Let's do the smiley face indicator. Like, there's a lot of this in trading. There's also a lot of losers in trading as well, right? There's too much of that out there. And it's not like it doesn't have its merit as good, but it's like, there's really no room to create more, I don't know, drawings. I call them like drawing indicators, right? They just look at price, do some math, regurgitate some output, and there's really no innovation to it. It's just price-based indicators. So I don't use price-based indicators anymore. All of our indicators are exploits like that hedge pressure, which is what I was describing. It's just a constant, there's something mechanical in the market we're exploiting that can have some consistency, and then we do that. The inverted wings flight pattern. Oh yeah, the sunspot and late May pattern. I've seen people. Oh, my light just disappeared. My light just died. There we go. So a lot of our rules on the cheat sheets, we give you these cheat sheets that describe what different things are happening and what it is we're exploiting. Hold on. I unplugged this. Hold on. Oh, I did. I unplugged it. Y'all don't watch me sitting here in the dark now. Hold on. Hot showing my camera is not powering my light. Oh, batteries. Oh, okay. Hang tight. For some reason, I thought my hot shoe was gonna power this, but I guess it's not. There we go. You don't watch me ominously sitting in the dark over here, do you? Ooh, we're back. Okay. Oh shit. Trade's not moving. Don't like it. So anyways, in the cheat sheets, we have different things that we use. Liquidity map is one of those things that just says, like, despite buying and selling, there's just some underlying pressure, and that's kind of what I was describing earlier. The options create movement in the market. This is from today's trade. Okay, let's pull some of these up. I don't like that we're supporting bull zone, so this is like what I don't want to see. I'll keep an eye out on this over here. So one of the rules that we have is utilizing the probability of like the S&P tracking the stocks that are in the index it's in. So the S&P, we call it a DD number. This is a ratio of the market cap between 0 and 100, like 50's in the middle, of market that's stocks market cap that's in a bull zone versus a bear zone. Those are determined from options. Just trust me on that. So normally when the SPY opens in a bear zone, it tends to return to bear zone 3 out of 4 times. If today is one of the 1 out of 4 times it doesn't do it, then it's a losing trade. But normally when you open in a bear zone, at minimum, when it touches bull zone, I tend to scalp it back to bear zone, and then I long from bear zone for it to go. This is like a 2-way trade I like to take. And then if it doesn't work, I just stop out. But here to there is a very probable move. And I don't bet any further than that. I scalp through this range every time. So it's like, basically, this is what it's telling you. It's that leg and that leg. I wasn't in on this leg. But normally here, back to there is a long from there to there, and then a short to return. So both of those legs are there. You jinxed it, Chad. You jinxed it. Now you're good. The market's trying to hedge higher and hold this 536 level. If you guys don't mind smashing that like button, give us some love. This is what I don't want to see. Wilbur says, how do you find the DD levels? Oh, okay. So they're in the Discord in the section here. The platform usually describes them, but our widget in the platform that has them is broken right now. We have to rewrite our bot. This is not going to take long to do that, but the numbers are posted here. Risk interval is calculated off of the CME groups. This is the first thing I told you that we came up with a decade ago, the risk interval. It's an exploit of margin requirements, and the risk interval, when you take, this is what my long trade was from today. So when you take like the close price in futures, if you go up or down this special number called a risk interval, it's based on margin requirements. That's all that's calculated from. Then this is your sweet spot to trade in. Anything else outside of there and outside of there for the day is, we call it irrational. Don't trade outside of DD bands until you're like a pro, and if you do, trade small. So inside of these the green band, like, that's why we call it DD, for doomsday. I mean, it's like, you know, you don't want to mess with it. So there's a rule, one of our best rules, called DD float. And DD float states right here that when the ratio, which is this number presented at the top, is greater than half when rational, or greater than 0.6 when irrational, as a rule of thumb. We're irrational today because some of those lights are red. Then the price of the S&P futures just does not want to break this band, because the sum of the stocks market cap is mostly bullish. So why would the S&P be bearish if the tilting point of the stocks is on the bull side? We found out that the overwhelming majority of the time, if this number is on the right side is this, then this green line is support that we trade off of. And it's so accurate, in fact, that green line tap today was higher volume than even the open volume, which is ridiculous. You don't normally see volume surpass the open volume, just on a normal candle. There's so much hedging that takes place on those edges because of margin risk here and here, that market makers themselves are balancing the market off of that. So market just fell. If you watch my stream all morning, I was like, I'm waiting. Usually it doesn't even want to touch the line. I have the magnet here just kind of as a cartoon to draw that it likes to repel the line. It doesn't even like to touch it. That's what it even says. It doesn't even want to touch it. Usually it gets close enough and it never even equates to that level, more often than not. So as it's falling, I set a stop below, and then I have a position here, and I just traded from here to there. That was my trade today. And it's a pretty rock solid trade. I don't ever bet that we break this and fall, and there's an event like a catalyst, CPI, FOMC. Yeah, it can cause it to happen without any news event or major thing. I don't bet on the S&P collapsing. And once you leave this DD band, market's pretty random though from there. The number we give to you every single night in the Discord at 5:45, we print it right for futures opens. 10 years positive catalyst, sucking up a little rock scooter power, non-catalyst state. Yeah, sometimes. But is there anything that make you want to go long off bull? Yeah, you should long on bull support every time. I always try to find an excuse to be a bull long if I haven't made a trade. So if you're in a bull setup right now, like this right here, you be the other side of the trade as me. But there's still, if there is a long trade, it is from there. So if people were longing on bull zone, which is also a setup, that is where one would be long. I would not long up here, and that's not investment advice for you. But if I were longing, it would have to be at the bull zone, yes, every time. So if I wanted to long, I would wait for it to touch, and I would long only here to be long. But this late in the day, I don't bet on breakouts in the last 2 hours. So if this were to happen at 8 or 9 o'clock in the morning, yes. The fact it's happening at 2 o'clock, 3 o'clock, no. I wouldn't. I don't bet until the end of the day. The only reason I'm trading right now is because you guys are watching me, and as we found, people don't like to watch you if you're not actually going to be trading as much. So see, the first time we did this afternoon slot, we had like 10 or 11 people, then we had 25, then we had 30, now we have 40. Let's get to 200 by the end of the month. Let all your friends know, be like, hey, Matt streams in the afternoon now. I bet you we can get 200 by the end of the month. There's really nobody streaming in this time slot, so kind of cool. Let's build it up. When we saw it, oh yeah, you saw it live, went through it, but then it bounced. Pretty amazing. The idea that you know somebody has calculated really good pivots is when you can predict volume. So all of our pivots are designed to predict volume. If you can predict volume, now one thing I like to say is there's a lot of people say you can predict a stock market. I'm going to tell you they're all full of shit. But I can predict volume almost every time. That's easily predictable because you're not picking a direction of the market. You're just picking on where traders going to assemble to battle. It's like I'm standing on a cliff right here, right? And I'm watching an army march this way and an army march this way in like olden times in antiquity. So I know that they're going to fight right here. I can see that. When they fight, I can tell that there's going to be a clash. I don't know who's going to win. That part's random. Unless like half of these guys have broken legs or something, and you might bet that these guys are going to win. And this, you really have no idea. You can just tell where they're going to fight. And volume is where they're going to fight. You can see that coming from a mile away. If anybody that's worth their weight in anything trying to create indicators on the market should create indicators that predict volume, because you can predict where that power is going to come to support the trade you want. If I want to be long and this volume comes through and decays and I don't get the support I want, then I'm out of the trade. If the market's just like dangling here and markets are like that, then there's no volume to come with it. Volume is everything as a trader. So all of these pivots that we've created predict volume, and they literally predict volume. They almost never fail to predict volume. Predicting the direction, however, and that's up to you to decide, right? That's the trader's dilemma. Here are volume prediction pivots. Okay, ready? I'll show you a couple of them. This is on SPY itself. As we know, the S&P and the futures mirror each other. This volume right here is our DD calculation and predicts that volume spike. Other volume is hedge pressure. Here. I guess all through here we interacted with it. So right here is a little bit of a volume spike. Right here is a volume spike. You see those spikes in volume that I'm drawing? Typically when you look at the stock market from 9:30 until 4, volume tends to do this. Without a catalyst or event, volume tends to decay right around lunch and then spike at the end of the day. It's like a J shape. And so what we're looking for are those spikes in volume along the way, where volume starts to increase a little bit. This volume spike was the build on half gap or other pivot. As markets are interacting and playing with hedge pressure, there's a huge volume spike. Does everybody see these volume spikes that are pivots? All of our pivots are designed to predict volume, and they never fail to do so. Like that's why I say this on the stream. This is recorded here forever. They never fail to predict volume. And so the neat thing is that we can predict volume correctly. Are you sold on the idea? Everyone? So far, so good. That's a starting point to creating any kind of foundation to make trades in. Remember, this is that DD band. It's a volume predictor. DD band. I already wrote that there. Hedge pressure volume, half gap volume, bull and bear zone volume. So the whole idea is that if you can predict where volume can be, then it's not like guessing where you're going to, like what direction market's going to go, but it's guessing on like where you do and don't trade. Who was here this morning? Who was here this morning and remembers when markets are right here? What did I do? Tell me, y'all remember what I did this morning? At this point in time, what did I say I was gonna? If y'all watch the stream this morning, you'll see exactly what I said I was gonna do. Right about here, what did I say I was gonna do? Remember? I waited, right? I waited until I got my setup. I waited only to the spot that mattered, and then I took my trade. Hold on. Let me show you. This is a great time slide. I think I'm going to keep it. I love it that you guys show up. Let me show you. And this is why we try to teach people to do this. If you're patient and you wait and you only trade where volume is going to be, you're going to have a much happier time trading because you're isolating just like the couple points that matter. Now, whether you're long or short, get it right or get it wrong, that's up to you. You don't always get the trade right. I don't always get the trade right. But I always trade from the right spot, even when I get it wrong. It eliminates a lot of the noise, a lot of the chop, and just lets you be patient for the things that you want. Let me just show you. And I'm looking handsome today on the stream. There we go. Are ready? Well, don't look at me making. I got like a funny face here. Hold on. Let me fast forward to where you're not catching me like mid sentence. Hold on. Okay. Look. From here, from literally here, I'm saying what I want to trade off of. I'm literally drawing this pivot here and saying I am longing from here and waiting for it. I'm not jumping in and trying to force a trade. I know there's volume here. The pivoting action is down from the blue line, as the liquidity map shows. And then I know that I've got DD flow to pick me up. And I circled this from 30 minutes before it happens and I wait for it. Sometimes it happens, sometimes it doesn't. Sometimes I'm wrong, sometimes I don't win. But I don't trade from anywhere. I don't long early. I don't long late. I long exactly where I want to long from and nowhere else. And the idea is that when you can predict where volume will be, then you can create trade plans and really act on them. Now, right now, I don't think I'm getting what I like. I've been waiting long enough to try to see this pan out, and it's trying to fail bull zone. Yeah, 50 people? Woo! Hit that like button, you guys. Thanks for tuning in. And don't forget to subscribe to the channel. We're gonna start doing this time slot in the afternoon. I love it. Let's take over the 2 p.m. Let's claim it. So right here, at that point in time, I just said I'm gonna wait for what I want. That's it. It was literally about right there. Actually, like it was right there, and I drew that. I drew those little white arrows. I said there's resistance from there. There's DD float from here, and then I circled that. And market just decided to fall, hits my target, the volume spikes up, and I go, ooh, I'm longing. Played around, I longed some more. The market started to rally, then I exited my long. Doesn't mean I'm always gonna be right or wrong, but I know that I'm not longing here, or here, or here, or here, or here. I'm longing only where I know volume will be. And what that does is it makes it a lot more manageable from a risk management standpoint. You can pick where you want to long, where you want to short, and don't play the chop in the middle. Trade from a place to a place. Bull zone to bear zone. Is there volume? You better bet your ass there's volume. Baby cakes. Look. Check it out. Check it out. That's from here. That's from there. Volume to volume. Hedge pressure again. Volume. Hedge pressure again. Volume. This is hedging. This is gamma hedging. The other side. You see how this works? These pivots. Bull zone bottom. Bear zone top. Close price. Open price. Hedge pressure. D bands. They're all predictable high volume pivots. Predictable. You now have an edge predicting where volume will be. Add this to whatever indicators you use that help you find direction, and then you're golden for your setups of trying to make trades happen. If I know where volume will be, then I can calculate risk to reward. I can long here and say, I want to get out there. That is exactly 16 points away. And with a 10-point stop, now I have a 1.6 to 1 trade. I've got reward to risk ratio before I even commit money. While trade is even right here, I know the reward I'm going to get for the risk I'm going to take if I'm right. I'm only going to execute here. I literally waited until here and I bought as that volume exhausted. Boom, I bought right here. And I do that every time, every day, every single day. Every day we post a DD level for the next day. Yes, every single day. They're available here in the platform itself, but the CME group changed their website where we get this information from. So I wrote a web scraper that reads their website and gets the information and does the calculation from it. They've changed their website recently, which broke our bot. So we need to rewrite the bot to reread the new site. So every day they publish in the public domain settlement information on contracts, and we utilize that. Margin requirement data, things like that. Until then, I've been doing you guys a favor in calculating them manually and posting them in our Discord. Remember, subscribe to the Rocket Scooter trial. Come to the Discord, and it's right here, Overnight Dynamics. So every night at 4:50 Central or 5:50 Eastern, give or take 15 minutes for futures market opens, I post them right here. So remember, don't let me be like a salesman here to tell you I can predict the stock market. Nobody can predict the fucking stock market at all. Nobody can. Don't let people sell you crap that they say does that, because you can't. I'm one of the first people that tells you as a trader that does this all day, every day, that you cannot predict the stock market any more than you can predict what card flips over in poker. The only thing you can do is calculate your odds of success and then bet when the odds are good. You can tell if the odds are slightly in your favor, not slightly in your favor, massively in your favor, not massively in your favor, and then you're betting on that happening, and it's still random at that point, right? Predicting volume is mechanical. There will be traders there because of delta hedging, margin hedging. There's all kind of stuff that we actually are exploiting that says, I know there will be activity here because there's something that goes on. There's something physical that we're exploiting. So predicting volume means there's only a couple of places I care about in my trade today. I'm not really caring about everything. I only care about a couple of things. So I'm not betting everywhere all the time. I watch newbie traders all the time, especially like I'll eventually glance on YouTube or something. And there's a lot of traders are streaming, right? There's a lot of newbie traders always trying to find a trade at weird times. You want to trade where volume will be every time. Always. All your entries and exits need to be where volume will be. Most of your volume, like I said, takes place at the beginning of the day and the end of the day. And at the end of the day, we really don't usually trade either. After 2 p.m., the markets are pretty much random as delta is being balanced for the following day. So that leaves just the beginning of the day and a couple of pivots. We have a rule that says don't trade after 2, even though I'm trading after 2. That's just for the stream. Do as I say, not as I do. Okay. So typically opening action between open and close and these hedge pivots, I'm only looking at a couple places there, there and there, there and there, and that's it. And nowhere in between am I touching the market. I've eliminated most things from my chart. So I'm betting. I'm betting, okay, maybe there to there, there to there, there to there, there back to there. And which one of these 4 trades do I want? And that's it. Right now, I'm betting on here back to there. So I'm only picking high volume nodes. It's predictable high volume nodes. And so I'm only trading where there's going to be, I'm not trading the noise. I'm not trading the crap. I'm not trading the chop. I'm not jumping in late and getting chopped out before I was right. You don't see me doing a lot of that. You typically see markets falling and I'm diving in on the red candle and it's reversing when I'm right. Markets rallying and I'm shorting against the green. And if I'm right, I'm right. If I'm wrong, I'm wrong. But I'm only trading where the volume will be. And that's important lesson number 1 for those of you that are new to trading or want to get good at trading. Try to find volume. Don't try to predict direction and don't try to chase the market. The only way you make money chasing a market is there's people dumber than you. You're chasing it later than you did. Try to be first to a trade. Me trying to short in here is making me first to a trade. If the market were to fall right there, I'm closing out by the time the rest of Wall Street's like, oh, well, maybe I should short. And then they short and get squeezed, right? So whether I'm right or wrong, it doesn't matter. If I keep the edge in my pocket and I have a certain risk I'm going to take and a certain reward I'm going to get, and that's it. I'm not going to let myself lose more than like 5 points from here for now. I need to make 10 points on the run. I'll lose 5 to get it. And then that's it. And if you're not trading with risk and reward known, you're basically just gambling. And poker players don't play poker without knowing their odds. The chances are I'm not getting the fall that I want. It's trying really hard to support here up until the last hour of the day, so I might just close it out. I don't get a lot of action off of this. And don't forget, subscribe to the stream if you want. That way you get notifications when we're live and you can come every day. Every day post the DD levels. Every day all the pivots are here. The platform gives you the information for the volume pivots too. And so most of you trading is just deciding like at a volume pivot, where does it go? But I'm not betting on like everywhere, everything. Right, I know from bull zone that it's important right here. So we'll see. It's really fighting to hold the bull zone. There's a lot of volume coming through right here. See how it's interacting with it, and that volume's starting to build again. You'll see this. Lots of volume spiking. Oh yeah, thank you. We need to check the VIX today. Come on, baby. The only issue you're seeing is that liquidity is building near your stop. Sam is 100% correct. Liquidity building at a stop or liquidity building in general typically means no volatility, right? So liquidity is the inverse of volatility. So as liquidity is building, as you can see, volume is activity starting to pick up. Liquid markets very rarely fall. And as Sam indicated, that's kind of going against the position I want. He's right. So another rule of thumb, you guys are taking notes. Oh, I love you smarty pantses here are correct. Liquidity is the opposite of volatility. They're inverse. Behaviorally inversed. Liquidity is the maximization of transactions in a period of time. So like a more liquid market will have more trades per second, more agreeable price differential between buyers and sellers as well. So they agree on a price better. So the bid and ask is smaller or tighter. Therefore, volatility is smaller. Volatility is just like anything else. Volatility is escape potential, or the desire in trading. The real definition of volatility is complex and most people get it wrong, but I'll tell you that your way to describe volatility is very simple. It's when price is flat on average over a period of time, like the average, and the trades are here and here and here and here. You can see that like the average price is the middle, like the buying and selling is around here, but the average is in the middle. So when the average in the middle, if the price is banding higher around the average, these kind of V-shaped areas are getting wider, the volatility is going up. If it's tightening up, then volatility is going down. So it's how much the market is seesawing constant delta. Easiest way to think about it, constant price. So if price is flat, your V's are going to get bigger. As if he's saying liquidity is building, then volatility is decreasing. This is what that means. Markets tightening up. Volatility is increasing. If liquidity is decreasing, then volatility is increasing. So it takes very little activity to move the market. There's a thinner floor and a thinner ceiling. So it takes fewer orders to move price around. So does that make sense? So remember when we say like liquidity and volatility. Liquidity is good because liquidity means that there's a lot of traders there. And it's it's harder for markets to go against you. A liquid market has very few dips on the bull side. It doesn't dip hard. A volatile market or like a liquid market tends to have smaller V's as it trades higher. Liquid market. A volatile market, when it trades lower, tends to have wider V's as it falls. It falls more chaotically. So you see how the V's are getting bigger and bigger and bigger. Bear markets tend to whipsaw harder as they fall, like that. Bull markets tend to tighten up and slow down that volatility as they move higher. And that's really the presence of liquidity. And that's really, it's causing that. Since I'm betting on the market falling, I want to be on the volatility side. As Sam had said, liquidity starting to build up as we see. I don't want liquidity here. I don't want there to be buyers here. I want there to be not that many buyers so that any few sellers can get me a quick little dip and I can get out. I'm literally only betting on a very quick dip because liquidity means it's not going to trend down and crash out. It means I'm going to get a quickie little dip if I get it and I'm out. Just that. That's it. Volume and tightening of price. So when you see volume, number one, so liquidity is equals a maximization of transactions. So two ways to see it. Number one is number of participants goes up. Wow. Very easy. Easiest way to think about it is you want to buy a house, right? Somebody sells you a house in the desert and they're like, I know it's $1 million house. I'll give it to you for 100,000. And you're like, wait, I can make 900,000 buying this house from you. Amazing. And you buy that house and on paper, you're $900,000 richer. However, due to liquidity and the lack of number of participants of willing buyers to come in and buy it from you in the middle of the desert is low. So lacking participants makes it hard for that transaction to take place. Does this make sense? Opportune moments, right? You might have this here's an example. Fucking Hello Kitty. Well, Roaring Kitty. Bro's got $500 million in GameStop that he can't sell to anybody. So he has to sit there and watch it bleed to zero because, I don't know, he's just trying to troll the market. This guy's going to make $0 on his trade. Doesn't matter anything because you're in a position by yourself where there's no participants. Nobody's buying from you at 60 bucks. So you don't have liquidity to support the market. So number of participants are great. If you buy a house for $100,000 and it's worth $1 million in the middle of a suburb, you will have people lining out the door fighting to get that house from you, right? So number of participants, easiest way to see liquidity. And the idea that volume is consistently higher than the average over that period of time means the number of participants gone up. So far, so good. I love that question, opportune moments. So like if volume is just like in a decay period right here, and that's like the average price, volume's starting to like build above the average. Yeah, so you have like a lot of participants. The next way to see liquidity is the price differential between the buyer and the seller. In the desert example, you tell the guy, hey, I'm gonna sell you the house for $1 million. And the guy's like, well, I'm your only buyer. So, you know, he's like, I'll sell it to you for $1 million. He's like, well, I'll buy it from 200,000. You'll make some money. I'll get a deal. We both win. And there was a huge price differential. One guy wants to sell for $1 million. One guy wants to buy for 200,000. So the space between the buyer and the seller means they have to negotiate more before they come to a deal. So anytime you buy a house, if you and the buyer, you're the buyer and they're the seller, are not on the same page, then it takes longer for you to close. In that instance, it might take many, many months of negotiating before one or any or either of you even budge to come closer together. But if you want to sell it for 500,000 and he wants to buy it for 450, you're in the ballpark, then the probability is higher that the transaction takes place sooner. So remember, liquidity is the maximization of transactions. So the number of participants increases the probability a transaction happens at a price, and then the smaller price differential reduces the amount of time needed to negotiate. So both of those things together price difference reduced. So when both of those things are happening, then liquidity is picking up. So when you start to see volume increase while price is wedging, that's liquidity. Easiest way to see it. Did I learn something today? I am not getting the move I want. I know I'm going to kind of wuss out on this, but it is not moving. So what you want to see and what he was commenting on is that, and this is just, so if you guys like I said, like the stream if you like it, feel free to subscribe. We kind of give knowledge bombs every day. As he was noting is that your volume is starting to pick up, lots of participants, right? And price is starting to kind of like consolidate in a way. Does that make sense? So the volatility is getting less, or the difference in buyers or sellers' opinion of the price, it's starting to wedge together. With volume to support that means it's liquid, and liquid markets do not crash, which is why it kind of doesn't want to fall right here. So like, I'm just sitting here like, this kind of sucks. I'm gonna give it like 2 more minutes and I'm gonna close out if it doesn't move. Enough participants with an agreeable price is a very low likelihood that the market does just swiftly start to fall. Seems like a good place to pin. Would be too shocked being up the exact place in the day. Yeah, like I think that we end up here probably by the end of the day. Yeah. So the opposite would be if liquidity was decreasing, then you would see volume just not pick up and the price to get wider, so that the little bit of trading that does happen has less resistance to movement, so it moves it farther. Man, I'm just kind of bored with this. I know I'm gonna completely what's out if I close this, so let me trim it. I said I was gonna give it 2 more minutes. This is the last. You got my attention for like 1 more minute trade. Yeah, volume come here. The market's definitely penning right here. It does not like... It doesn't hate this level. I'm not getting the move that I want. I kind of want it to be swifter. So even in a risk management sense, like I know what I want and I can see that I want the market to come down. I don't want to see liquidity. I don't want to see volume growing and price consolidating. I don't want to see that. So I'm going to close. Close flat. 15 for the day. Whatever. So I'm going to walk away on this one. Probably a good idea. So again, these trades at the end of the day, they're more challenging. They're more random. I know what I want to see, so I'm going to close out. Hopefully I got out before everyone else, like, in the stock market starts ripping this. So I wanted to see a lot more movement. It's not happening. It's starting to reapproach the support I don't want it to support. So I'm going to call it. And there you go. Like on the streams, risk management. So we teach you like these kind of things in these classes we teach. So y'all are always welcome to come check it out. Especially if you subscribe to the Rocket Scooter program, you can check out. We have lots of training to come with these tools. So, but sub to the stream, you guys. I'm super excited. We got 50 today. I was excited. We had 40. Time to bring a certain person back that you guys all love and miss. It's gonna close down a little bit. Oh no, what's going on? My displays are all turning off here. Hold on. What the heck? My tablet just went kaputs on me. Hold on. Oh yeah, you can see the monitor here, huh? Let me scoot this way a little bit. Okay. Listen, I had the bandana before Roaring Kitty did. This is a 2017 thing. No, 2018 thing. Maybe 2019. So, they used to call me Sensei. When Cobra Kai came out. That was everyone's joke. So so whenever I make a good trade, we put on the bandana. You bet the building isn't grounded? Bro, I'm telling you, I think the grounding is shit here. Yeah, so like last night, yeah, John remembers my story from today. Last night, a lightning storm came through. And the breaker for this office. So I live in like a 4-story house, right? All 3 floors, including the rooftop deck. Perfect. Bottom floor, however, completely black. Everything went out. And I turned the breaker on. It wouldn't turn on. Turn it on, turn off. Went and unplugged everything. Typically, it happens when you have a circuit overload. You unplug everything. Then turn it on. Light blinked twice, which is ground fault status code. So electrician will tell you a ground fault is where your hot wire creates a shortcut to the ground. Like a short circuit is where the hot wire, before it reaches the load, touches the cold wire, which usually goes to ground. So either way, like the grounding sucks ass here. Yeah. For whatever reason, I've had ground fault problems before. with major lightning storms. I might have to do, and again, I'm not like a electrical engineer here, as I don't know all the things of it, but I think lightning might have something to do with it. Is that if you create enough voltage, current can find its way to the ground, even with proper grounding. So lightning struck something outside, and the house, something around the house or something around here was, or the wiring in the wall or something was just poorly designed, and that, I don't know, it just was not, it was just grounding itself. And I think like overnight I let it sit, and then in the morning I flipped the breaker and things are fine, which means whatever charge was built up somewhere forcing some grounding, just the potential was gone and stopped doing it. But it means that that's improperly grounded here. Step potential. I had to teach you what's going on there, John, 'cause I don't know any of that stuff. Electric gremlins. Houston's all concrete. That's why it's all concrete here. And I live in the city, so it's like street. I barely have a yard. And lightning was striking pretty close to the house last night, so it was enough to make a couple jump scares while I was laying there. That's probably what it was. Anyways, I thought I was nervous I was gonna have power. So y'all see me sometimes that I lose power and I'm gone for the day. That happens very often. I say very often, like during storms, like once or twice a month. We'll get a storm in the summer. Maybe like once every couple of months, I'll probably lose power a little bit. But I'm also in the older part of the city. The older part, but like it's like one of the original wards of Houston that's now like developing. There's 100, like down the street, there's literally 130-year-old houses down the street, like historic landmarks. And then now people are like knocking down old houses and building these like giant houses here in the city. So I kind of live in a neighborhood that's doing that, or a neighborhood like a block that's doing that. So the grid is like super old here. Generator time, yeah. That's right. So you see how I didn't get the trade I wanted, so I called it. Usually with these short side sells and these moves like this, I want the move to happen quick. As you see, my average was right here. It started to go in my favor, but once it moved here a second time after it lost the fight, so it was fighting, it lost the fight, and then regained the support. I got out of the way. And so this looks to be a good decision on my behalf, right? And one may say, well, why don't you long it? Usually if I pick a trade and I'm convinced I'm going to get it and it doesn't look like it's working, I wait to see if I can still get it. But I don't ever reverse and flip-flop and go the other way. That's it. For real, I need a generator. We've had some wicked storms here lately. A tornado whipped through Houston a couple weeks ago. Half the city was, or maybe closer to like 3 weeks ago now. Half the city was out without power for a week. It killed major structural supports and the power transfer system. Like the big ones, like the ones that carry those, you know, 100,000 volt lines. Those big ones that supply the city. Those big giant steel structures were completely like crumpled and bent in half like a tin can. Like this little TP looking things were like mangled. Just out of nowhere, everyone's phones are going off. It was like, tornado warning right now in your area. And we're like, what? Walk outside. It's like, it's perfectly nice out. Wait a minute. Oh my God, those clouds are dark. It's massive, just yellowish brown clouds just rolled over. Wrecked my garden pretty good, but eventually worked its way out. Tornado came very close to my house, by the way. Very close. Let me show you guys. This was the storm like out of the blue when it came. It was nuts. So my whole garden structure was just like, all my plants are knocked over, but this thing was just demolished. It ended up on the neighbor's roof the very next storm that I had. They came back and rebuilt it that night after the storm went away. Literally, the storm came and went. Like 30 minutes later, it was no longer raining. They rebuilt it. I don't know if I posted anymore, but yeah, it was pretty wicked. I got that old El Nino going there. Transmission lines, it's 60 to 220 kilovolts. Dang, it goes up to 220. Sheesh. Yeah. There was some pictures I found online before I get out of here. I'll show you what some of them did. Yeah, there's like a ton of pictures of it. It was like this, dude. John, look at that. Tornado just freaking they completely just crumpled that thing in half and bent it over. It was pretty wicked. And these are like major. This is up in the Cypress area, like Northwest Houston. Look at this. Nuts, right? Just literally just completely like they were made of like an aluminum can. Look at that. Look at this. Those structures they're probably aluminum, right? Or are they steel? Probably, maybe steel. I don't want to use aluminum for like lightweight, but even if they're steel, whatever, steel is a little harder than aluminum. This is just crumpled over like that. We don't usually get a lot of tornadoes here, so it was pretty nasty. Yeah, steel. Anyways, all right, you guys, love y'all. I'm gonna get out of here. Thanks for staying in. Come here every single morning, 9:30, every single day, 2 o'clock. We'll do the stream. Love you. We're gonna get out of here, call it a day. I don't normally stream till the close of the market. There's really nothing to do. Looks like it's kind of pegged right here at 536. It's gonna be kind of random. I didn't really want to play with it here. We'll see y'all tomorrow. Don't forget, subscribe to the stream. Before you go, don't forget, you get notifications when we go live. I love you guys. For real, for real. We'll see y'all later. And don't forget, marketplace is like inches away. Our head of development had to leave, had some family things to do this week, so it got delayed a couple days. Oh, as I'm getting offline, there goes my trade. Oh well, better safe than sorry, right? But anyways, check out Extended Trough for $35. You can just get all the indicators, all the videos at your spare time, learn something about risk management, learn something about how dealers work. Positional risk is a way to risk manage for yourself. Never a terrible thing to know where volume will be so that you can see when volume's going against you or with you. We love you all. So thanks for tuning in. We'll see you later. Discord link below in the description. Or if you subscribe to the platform, it automatically gives you access to Discord. One easy step. I love you guys. See you later.